India's #1 news network, and you're watching News 9. English news as it should be.
Very good morning. You're watching News 9. I'm Karthik Malhotra. We've got a power-packed show ahead of ourselves this Tuesday morning. All eyes are on the India-EU Free Trade Agreement conclusion talks. What's on agenda and what can be expected? We'll have a battery of experts joining us to decode what the India-EU trade deal would eventually look like. Also on the show, stock markets have been underperforming this calendar year. In fact, FII exits have prompted the Nifty 50 to slip 4% from its first Jan levels in just the first 25 days or so of this trading year. And of course, we will also have our budget segment and budget 2026 expectations. Luxor's Managing Director Pooja Jain will join us live on the show to tell us her wish list from Finance Minister Nirmala Sitharaman. All this and more on this edition of Morning Brief at 9. This is Morning Brief at 9. First up, here are all the headlines we're tracking for you this Tuesday morning. US Treasury Secretary Scott Bessent disses India-EU trade deal, says both India and Europe funding Russia's war in Ukraine via energy trade. The much-awaited India-EU summit to kick off today. Conclusion of the free trade agreement to be announced. Defence cooperation and mobility of Indians in Europe also on agenda. India plans to slash import tariff on European cars to 40% from as high as 110%, marking its biggest market opening yet as New Delhi and Brussels close in on the landmark free trade deal. US dollar index slips to 4-month low at 97 over geopolitical tension. Safe haven gold crosses the $5,000 an ounce mark. Asian markets opening higher this morning. US President Donald Trump raises tariffs on South Korean imports to 25% from 15%, accusing Seoul of failing to live up to commitments under last year's trade agreement. Donald Trump remains deeply involved in efforts to end the Ukraine war as Kyiv confirms Russian and Ukrainian negotiators are set to resume talks this Sunday, with President Zelensky urging allies to keep pressure on Moscow. NATO chief Mark Rutte dismisses proposals for an independent European army, telling supporters to keep on dreaming and reaffirming NATO as Europe's core security pillar. Meanwhile, the European Commission launches an investigation into Elon Musk's Grok chatbot over concerns it generated explicit imagery, intensifying regulatory scrutiny on AI platforms. And European nations sign a clean energy pact targeting 100 gigawatts of offshore wind power as the EU gives final approval to ban Russian gas imports by late 2027. And the big story we will be keeping an eye on all day today on News 9. Well, almost 2 decades in the making, India and the European Union are all set to announce the conclusion of the free trade agreement today at the India-EU summit that hosts European Commission President Ursula von der Leyen and European Council Chief Antonio Costa. Now, the two European leaders were guests of honor at India's 77th Republic Day celebration yesterday. Remember, since 2007, in fact, both sides have been trying to work on closing free trade negotiations, a movement that caught momentum only last year with US President Donald Trump's sweeping tariffs across countries, with India facing the steepest 50% tariff on its largest trading partner, the US. Now, today's summit will put in motion India's exports, finding a more lucrative 27-nation European Union market, while lower import costs for Indians buying Europe-made products. Now, India's textile, apparel, leather and gems and jewelry sector hit hard by US tariffs is likely to find breathing room in Europe, while Europe is set to discover a bigger Indian markets for its automobiles as well as spirits. Now, India and EU traded goods worth $136 billion in 2024-25. The two sides expect to more than double that number in coming years. Now, alongside, certain sensitivities are also expected to get ironed out, including the agriculture and dairy sector being kept outside of the ambit of the free trade agreement that India wants to protect. The hefty carbon tax or CABM on the steel sector that came into effect this year is likely to see some favorable, if not at least an agreeable conclusion today. So let's put all this in perspective. We have a battery of experts joining us this morning. Barnik Chitran Mehta, PE Investor Managing Partner, Chrysalis Equity. Dr. Jayant Gupta, former Indian Ambassador to the WTO. And Dr. Lavish Bhandari, President, Center for Social and Economic Progress. Gentlemen, thank you so much for your time and for joining us on this very important developing story. First up, Mr. Bhandari, let me first begin by asking you $136 billion of trade already between EU and India. What next after the trade deal today gets announced?
Well, the most important is that the rollout, how quickly we are able to achieve that. The FTA is just a signing, and then after that, there is obviously a whole rollout phase. So we'd like to accelerate it because clearly there are going to be immense benefits for India. And it's not just about a few sectors. It's going to be across the board. This is going to be one of the most important FTAs that we have signed, and of course, the one with the most potential. And let me just add, trade and investment tend to go together. So with this FTA, we should also expect a large surge in investment into India and, of course, Indian investment globally.
All right. So investments and not just trade is something which one would await announcements on. But Mr. Jayant Gupta, what does this really mean overall in the messaging that India and EU coming together at a critical time like this when India is slapped with the 50% tariff and Scott Bessent once again not just blaming India, but this time also Europe in saying that both India and Europe are responsible for funding the war in Ukraine?
I think that is only a piece of rhetoric which the US administration and its ministers have been repeating ad nauseum. As far as Russian oil is concerned, the US also buys uranium, palladium, fertilizers, etc. Doesn't that go into the Russian coffers? Just asking this question.
Right.
So the US is blind to its own activities on the trade front and is always trying to point fingers. As far as this EU deal is concerned, it was initiated in 2007 as the BTIA, and then it went into hibernation between 2013 and 2022 for 9 whole years. And 2022, I think it was resumed, and it is now almost concluded. I think 20 out of 24 chapters have been concluded, but a few issues still need to be sorted out. But for the other 20 chapters which have been concluded, legal scrubbing is taking place. So as soon as the other 4 chapters get concluded, the deal will be signed sometime later this year. And it will get implemented after the ratification by the EU Parliament by early next year, 2027. And this is, of course, the EU is the largest partner of India on the trade front. $136 billion, as you mentioned, on goods,
right,
and another $83 billion in services. So it is much, much larger than the US, which is about $190 billion, and for China as well. So this is, I think, the most significant trade deal that India has ever signed, if I may put it in these words. And another point I wanted to mention is that Canada, with which I think our relations had gone through a trough about 3-4 years ago, Canada is also now wanting to sign a comprehensive economic partnership agreement with India. Right. Because it also realizes that with the US, it is on very uncertain grounds.
Absolutely.
And Mark Carney is coming to India in March, possibly to give a fillip to the talks which have been going on for the past 2 years, but again had been put on hold because of the former Prime Minister Justin Trudeau.
That's right. So a lot happening in the world, and especially with Canada again, which is under threat of now receiving a 100% tariff slip from the US. But Barnik Chitran Metra, sticking specifically to the India-EU deal, which is likely to see fruition today, there are also these sensitive sectors for which India did not give in to US demands in the context of the India-US trade deal. And I'm really talking about the dairy sector and the agriculture sector. And I think the European Union has made it pretty clear that these two critical sectors, sensitive sectors, have been kept outside of the ambit of India's trade agreement. But what about the carbon tax? That has been a pressing issue. CBAM, which came into effect on the 1st of Jan. Is there likely to be some sort of a formula, some sort of a consensus on how Indian steel exports to Europe can be protected as well?
I don't think I expect a comprehensive formula to be announced today, maybe more an intent to work on this together. As Ambassador Dasgupta mentioned, I think the real devil is in the detail. I think we have to look at the final legal version of the trade agreement, which will be published only 5-6 months from now. I think legal scrubbing will continue from the framework announcement today. But again, knowing how strict Europe is and how serious Europe is about carbon adjustment taxes, I think let us see what they announce. I don't expect there to be a major concession, at least announced today, unless there is more discussion, at least on legality on how to implement and also to ensure parity with similar taxes applied to other trading partners for the European Union. But I think the broader point to note is that what the US should realize is that in the current environment where they are ultra transactional, the rest of the world will figure out a way to trade around the US and trade avoiding the US.
Right.
Where, by the way, as Ambassador Dasgupta pointed out, probably for the last 10-15 years, the US has been India's largest trading partner. This prime position has now been taken over by the European Union. And with today's trade agreement, which will be far more comprehensive than some of the sectors we've covered, which will also cover security defense pacts, which will cover mobility and also likely investment promotion.
Yeah.
I think we expect not only trade, but there will be a great fillip to investments on both sides, with European institutional investors getting access to Indian investments and Indian institutions also getting access to Indian diaspora in Europe,
right,
which creates a far deeper partnership that India has had with Europe, at least on the trade and investment front, than over the last 20 years. All
right, we will come to all these specifics, Barnik, that you mentioned, especially the defense cooperation as well as mobility of Indians in Europe. But to a point that you made just a while earlier, Mr. Lavish Bhandari, Dr. Lavish Bhandari, if I can bring you in, should the world actually stand up now and say thank you, President Donald Trump, because had it not been for you and your sweeping tariffs, perhaps these FTAs and all the trade agreements which are happening in the world would have potentially stayed in limbo. So is it time for in a way, to say thank you for the blessing in disguise, President Donald Trump?
Well, yeah, we must thank him, but of course not publicly, because clearly it has accelerated many FTAs globally,
right,
and this one for sure. But I think I would just like to add one more thing on the CBAM. I mean, one must appreciate that the Europe is going to move more and more towards green economy. And CBAM is the one way that it is able to protect itself against non-green products. So it's going to be very difficult for it to give any major freedom to India on CBAM.
All right. If I can bring in Ambassador Jayant Dasgupta, sir, the CBAM sort of, expectation, or rather the sort of proposal that India had on the table when the CBAM issue really cropped up about 2 years back, was that India said it's better that India taxes the steel exports right here at the source, which is in India, and use those taxes to fund green energy projects. Is that something which you think is practical and likely agreeable by the European Union? Instead of EU taxing India's steel exports, India taxes them at source and uses that money for its own economic development.
From the reports that have emanated from non-official sources, the EU is unlikely to budge on this CBAM because it will involve many other countries on which the EU would be imposing CBAM uniformly. So I don't think there would be any relaxation or waiver given to India, no matter whatever mechanism we suggest. about taxing steel and aluminum exports in India and other things.
All right.
So that is one thing. The other point which is emerging is that the EU will give some kind of a solution so that the burden of the CBAM is lightened to a certain extent by providing other means of explaining as to the carbon credits that are accruing in other areas of the industry.
All right.
So that is what is in the offing. But again, I think the details are yet to be worked out, and those form part of the balance 4 chapters which are yet to be finalized.
All right. Dr. Lavish Bhandari, overall the $136 billion of trade now on account of potentially CBAM, while softening but still adding some pressure on India's steel exports, but the free trade agreement over time likely to aid India's MSME sector, especially leather, textiles, apparel, etc. Do we see some sort of a nullification in trade volume, or do you actually anticipate growth of trade between India and EU?
I expect a major growth.
Can we quantify it, sir? When you say major, can we quantify it, this 136 billion, let's say after the legal scrubbing, once the deal comes into effect, what is the number that we can potentially target by 2030, let's say?
Well, I wish I could give you a number. I really do. But, we don't know the details of it. Right. It's not even published yet. So it's going to be very difficult. But you're talking definitely about double-digit growth, maybe in the very high double-digit growth. But where it is, of course, we need to know the details. I'd like to add that the taxation solution that you suggested, a variation of that is CBAM compliant. As long as those products are costly enough, Europe may be willing to accept that. So there may be some freedom there.
All right, there could be some freedom, some relaxation, potentially some changing to the formula, but an acceptance from India and from the European Union. Now, coming back, Barnik, to you, you had made this interesting point about mobility of Indians in Europe. Now, this again comes at a time when immigration is a big challenge in the US. So overall, Indians likely to find better job prospects, better educational avenues in Europe with the FTA potentially coming through?
Well, let's look at the details of the deal as to what gets announced. But if you step back and look at services, right, I think services, one of the biggest exports India has. If you look at areas like IT and increasingly other products offered either by our startups or even by traditional services like banking and wealth management, you will see or likely see that there will be a framework which allows Indian professionals to move more freely to Europe to work on short-term projects and even medium-term projects. I don't think there'll be a big win on immigration per se, but in terms of work visas and particularly short-term work visit, there's expectation to be greater mobility. I think one of the biggest priorities, for example, for the Indian IT sector has been to build out Europe as a beachhead over the last 10, 15 years. I think the US market or the North America market has always been 1.5 to 2 times of the European market. One of the biggest rate limiting factors has been the availability and the difficulty of procuring work visas, particularly short-term work visas for Indian professionals to travel to Europe and work in Europe for short-term projects. So let's see what gets announced. I'm quite hopeful that given what's going on with immigration in the US and given that European Union in general is dependent on the world for a lot of its goods and services, they have no other means but to actually free up short-term mobility and create more labor movement mechanisms so that skilled labor, and this is IT professionals, maybe also in other sectors like electronics manufacturing, maybe even in pharmaceutical manufacturing, you will see some sort of mobility. And the standard bane for professionals and investors like us is the ability to procure short-term Schengen visas or short-term visas to travel to the European Union, which have become much harder since COVID, given the processing times and the shorter duration.
Right.
We do expect that some relief may be announced, which will go a good way in terms of boosting Indian service exports, particularly to Europe.
All right. And finally to you, Ambassador Dasgupta, there has been obviously this talk about defense cooperation also building between India and EU. This also comes at a time when, again, thanks to, if I can, use that phrase, thanks to President Donald Trump, all of Europe is also expected to increase its defense budgets. Germany has already stated that it is going to increase it to 5% of its GDP. But overall, at a time when defense spending in NATO across Europe is increasing, this defense cooperation between India and EU is just likely to further propel the Atmanirbhar defense ambitions of India, Make in India ambitions for India's defense sector, where Indian companies engaged in manufacturing of defense equipment will find a much more lucrative market in Europe.
I think there are several aspects that you have raised. The first one is about technology transfer and co-production. Now, as just a few weeks ago, India was in talks with Germany about submarine or a submarine project.
Right.
And the Germans had promised, apparently, that the submarines could be made partially in India with technology transfer also involved in it.
That's right.
India is likely to place an order for about 114 Rafale fighter jets. And in the first tranche of 36, of course, they came in ready to fly condition. But now I think India will dig its heels in and ask for technology transfer and co-production in India. So these are things which are evolving. And India is unlikely to buy from the Europeans weapons or aircraft, etc., which will not involve a certain degree of technology transfer and co-production as well as offset in India. So all these things will be there. And whether India will be able to sell back to the Europeans, I think that is a debatable question.
Okay.
Because it may take several years before the Indian industry gains that kind of expertise and technology savviness. So that is something which will have to wait for the future.
Absolutely.
As far as the deals which are being talked about with the US on defense procurement, I think India will take a very objective view of procurement. If the equipment is good enough, whether it comes from the US or from Germany or France or
Russia for that matter,
friendly country, or Russia for that matter, we are continuing to buy from Russia.
Absolutely.
So we will be agnostic about our source of supply, and we'll continue to buy.
All right. Well, let's leave it at that, gentlemen. Barnachitran Metra, Dr. Jayant Das Gupta and Dr. Lavish Bhandari, pleasure having you here with us on News 9, and thank you so much for your input to that developing story. And with that, we will slip into a very short break, but a lot more coming up on the other side. Keep watching News 9.
Taxes, jobs, housing, electric vehicles, defense. News 9 decodes the numbers behind the noise. You define India's growth story. We decode what's in it for you. Budget 2026. No noise, no confusion. A budget for a bulletproof Bharat. This isn't a trail of peace. This is pressure overload. A hill built for 1,000, forced to carry lakhs.
Instead of lightening the footprint, you have allowed people to actually get into every nook and corner of the Himalayas.
Careless travel, choking hills. If we don't change now, there won't be much left to enjoy.
We need to follow the Bhutan model, regulate people who can access hills.
News 9 presents Heal the Hills, continuous coverage.
टाटा कैपिटल टू व्हीलर लोन्स के साथ इसने की अपनी नई बाइक की जिद पूरी।
Welcome back. You're watching Morning Brief at 9 right here on News 9 this Tuesday morning. Let's bring you a heads up of all to expect on the markets this morning. First up, let's begin with the US stock markets. And on Wall Street, the S&P 500 and the Nasdaq extended their rally for a fourth straight session on Monday as investors positioned themselves ahead of a busy week of mega cap earnings and a key Federal Reserve policy update. Markets remain upbeat as traders looked for signals on the future path of interest rates, even as major tech and growth companies prepare to report their results. Take a look.
U.S. stocks finished higher Monday with the Dow adding 0.6%, the S&P 500 climbing 0.5%, and the tech-heavy Nasdaq rising 0.4. The S&P and the Nasdaq advanced for a fourth consecutive session. Investors are gearing up for a slew of mega-cap earnings and a Federal Reserve update on interest rate policy later this week. It will be a key test for a rally powered by euphoria around AI. The S&P 500 materials sector rose during the session, and gold prices vaulted above $5,000 an ounce for the first time. Ben McMillan, Chief Investment Officer with IDX Advisors, says he remains bullish on gold.
I do think, gold continues to march higher. I don't think it's, investors, I don't think should expect the same type of returns this year as we saw last year. But I also, we've had conversations where, we've had investors come and say, okay, we had a good rip, let's sell out of everything. And we're telling people, don't look at this as another commodity run up. This is not like the Hunt brothers in the 80s where, gold or silver is going to retrace 80% or even 50%. This is a shift in the demand curve. This is a secular, generational shift.
Stocks on the move included JetBlue, which dropped nearly 4%, as the airline sector dealt with the aftermath of mass disruptions in flight schedules after a huge winter storm hit the eastern United States. And shares of CoreWeave gained nearly 6% after NVIDIA expanded its partnership with the cloud infrastructure company by investing $2 billion.
So that's the update from Wall Street, but let's shift focus to Asian markets. And Asian markets, barring India, seem to be on an upsurge this morning. In fact, despite the 25% tariff threat that the US has imposed on South Korea, the Kospi continues to be on an upward momentum. In fact, the South Korean index is up almost 1.75 of a percentage point, 1.74% or so on the charts this morning. So is the news coming in actually even from Hong Kong. The Hang Seng is up about 1.25%, and pretty much all Asian markets continue to be in the green territory, even though the Shanghai composite is pretty much flat, but still flattish green. But India seems to be a completely different story, and FII exits are continuing to weigh down heavily on the Indian stock markets. If you pull up the Indian stock markets, you'll see that both the Sensex and the Nifty have got a gap down opening this morning. In fact, GIFT Nifty indicators were suggesting a flattish green start, but it seems that the first 5 minutes or so of trading have resulted. In fact, first 10 minutes now have indicated that both the Sensex and the Nifty, despite all that's happening with the India-EU trade deal likely to be announced today, you're seeing markets not reacting favorably at all this morning. In fact, Nifty 50 is now down below the 25,000 level, and the Sensex just about holding above that 81,000 odd level. Similar pain being felt even in the small cap and the mid cap space. In fact, the small cap space is down about 0.75 of a percentage point, and volatility in the Indian market is up to a level of about 15.8 or so in the first 10 minutes of trading this morning. Let's pull up the Nifty 50 heat map and try and see which are the sectors which are really leading this drain on investor wealth this morning. And it seems to be that the auto sector is facing massive headwinds. Could this potentially be the fact that India has reduced or is likely to ratify its approval of reducing custom duty on Europe-made cars, which are above 15,000 euros a piece? That could be something which is weighing down on the Indian auto sector this morning. In fact, Mahindra & Mahindra stock is down about 4% or so in early trade this morning. Maruti Suzuki also down more than 2% or so in trade. Meanwhile, if you look at other sectors, Reliance, the heavyweight on the Nifty 50, is down about 1%. This could potentially again be a trigger caused by US Treasury Secretary Scott Bessent, who said that India and Europe continuing with their Russian oil trade could be actually funding the war in Ukraine. Meanwhile, in the banking services side, you've got Axis Bank, which announced a handsome set of results. Over the weekend, you see the Axis Bank stock is up about 3.6% or so. So that's the view in the first 10 minutes or so of trading on the Indian stock exchanges. And moving on now to other global stories that we're tracking for you. The US President Donald Trump has announced a sharp hike in tariffs on South Korean imports, raising duties to 25% after accusing Seoul of failing to live up to a trade deal reached last year. In a post on Truth Social, Trump said the increase would apply across a wide range of products, including automobiles, lumber, pharmaceuticals, and what he called all other reciprocal tariffs. He claimed the United States had moved quickly to reduce its tariff under the agreement, while South Korea's lawmakers had been slow to approve the deal. Seoul, however, said it had not received any official notice of the tariff hike and is seeking urgent talks with Washington to clarify the situation. The tariff move comes despite a deal reached in October, under which South Korea pledged to invest $350 billion in the United States, including in shipbuilding. The White House on Monday said US President Donald Trump remains deeply engaged in efforts to end the war in Ukraine, pushing back against suggestions that Washington is stepping away from the peace processes. Now, White House Press Secretary Karoline Leavitt told reporters that Trump is not giving up on negotiations, though she said there were no scheduled calls at this point with Russian or Ukrainian leaders. Listen in.
I'm not tracking any scheduled calls at this point in time. However, the president remains deeply involved, and of course he's being apprised by his advisors, namely Jared Kushner and Special Envoy Witkoff, on these talks. They had a multilateral meeting this past weekend, which didn't get a ton of coverage, but that was historic in nature, where the president's team has really brought two sides of this war to the table together to move the ball closer towards peace. So the president is not giving up on the peace process. He obviously just met with President Zelensky when we were in Davos, Switzerland, but I'm not tracking any calls scheduled for this week.
Meanwhile, Ukrainian President Volodymyr Zelensky said talks between Ukraine and Russian negotiators are expected to resume on the 1st of February, though he added it would be preferable if discussions could begin even sooner. Now, in his nightly address on Monday, Zelensky said the two sides are already discussing possible steps towards ending the war during talks held last week in Abu Dhabi, including how any agreement could be mentioned and enforced. Listen in.
Today, our delegation also presented a full report. The guys returned after trilateral meetings. After a long time, there was again a format with the Americans and Russians. They managed to discuss various issues of a more military nature, those concerning steps to end the war and real control and monitoring. Some issues need to be prepared for the next meeting. We previously discussed that the teams would meet again on Sunday. It would be good if this meeting could be sped up.
Meanwhile, the Kremlin said the issue of territory remains fundamental to Russia in any peace negotiations involving Ukraine, and the United States underscoring the key obstacle facing the next round of talks. Many U.S. companies have tried to reassure investors that higher tariffs remain manageable, but early signals from the earnings season suggest profit margins could be under pressure. Now, this pushback is raising concerns across corporate America that tariffs could begin to erode margins and weigh on earnings in the months ahead. Take a look.
Many U.S. companies have sought to reassure investors that U.S. President Donald Trump's tariffs are manageable. But corporate America so far this earnings season is signaling that profit margins could be squeezed as consumers push back on higher prices. Bellwethers, including Procter & Gamble and 3M, have flagged these challenges. And Andy Jassy, CEO of Amazon, told CNBC on the sidelines of the World Economic Forum in Davos that the retail giant was seeing prices tick up on its e-commerce platform, as sellers have sold the inventory they built up before tariffs went into effect. Numerous companies with global footprints report results in the coming week, including General Motors and Caterpillar. While broader consumer spending has held up, buyers have been more judicious, often looking for value items, particularly lower and middle-income earners. One economic strategist told Reuters, quote, "Most consumers are still mad about the level of current prices and won't take kindly to further hikes." Levi Strauss reports holiday quarter results on Wednesday. The company said in October that tariffs would cut its margins more than it had anticipated. Levi's has raised some prices while trying to diversify its supply chain, and the company also warned of a softer consumer environment. 3 Harvard University professors have been tracking the price of roughly 360,000 goods, from carpets to coffee, at major online and brick-and-mortar retailers in the United States. They estimate that as of year-end, domestic goods cost about 4.3 percentage points more than would have been expected based on the pre-tariff regime, while imported goods are about 5.8 percentage points more expensive. According to the Yale Budget Lab, the effective tariff rate on U.S. consumers as of mid-November was 14.4%, the highest in 85 years. The current tariff regime could be interrupted if the U.S. Supreme Court rules against President Donald Trump's use of emergency economic powers to implement them. That could lead to massive refunds for companies that had to pay dues, but the process could play out over years, and the White House plans to use other means to keep the tariffs in place.
From US, let's pivot to Europe now. Several European countries on Monday signed a clean energy pact at the North Sea Summit in Germany's Hamburg, committing to deliver 100 gigawatts of offshore wind capacity through large-scale joint products. At the same time, the European Union gave final approval to a plan to ban imports of Russian gas by late 2027, marking a major step in reducing Europe's reliance on Russian energy supplies. Take a look.
Germany, Britain, Denmark, and other European nations signed a clean energy pact at the North Sea Summit in Hamburg on Monday. They are pledging to deliver 100 gigawatts of offshore wind power capacity through large-scale joint projects.
The Green New Scheme, windmills all over the place.
Monday's agreement is a sharp contrast to U.S. President Donald Trump's comments on green energy at the World Economic Forum in Davos last week. In a speech, he ramped up criticism of Europe's shift to low-carbon energy, saying countries that rely on wind turbines lose money.
There are windmills all over the place, and they are losers.
Despite Trump's criticism, Denmark's Energy and Climate Minister Lars Aagaard reaffirmed the region's commitment to wind power as a way to boost energy security.
Europe needs to be able to do more by itself. I'm not pointing fingers at anybody specifics, but no continent, and definitely not Europe, should be dependent on a very limited number of suppliers, regardless of what you need.
Ending dependence on Russian energy in particular has been among Europe's top goals. European Union member states on Monday gave final approval to imposing a ban on Russian gas imports by late 2027, making the break from their former top supplier legally binding. EU Commissioner for Energy and Housing Dan Jorgensen said the message to Russia and its leader Vladimir Putin is clear.
No more will we let you weaponize energy against us. No more will we let you blackmail member states of the European Union. And no more will we help indirectly fund the war in Ukraine.
But a new imbalance could cloud the push for energy sovereignty. The EU sourced 27% of total gas and liquefied natural gas imports from the United States in 2025. According to the Institute for Energy Economics and Financial Analysis, new LNG contracts mean this figure could rise to 40% by 2030.
We want to trade and deal with the US on as many issues as possible. But we are, of course, aware, and this goes for all countries, not only the US, that we are not aiming at replacing one dependency with a new dependency. We want to grow our own energy, and our strategy in the future is to become free of gas.
All right, NATO Secretary General Mark Rutte on Monday firmly rejected calls for a separate European army, telling proponents of a force outside the US-led NATO alliance to keep on dreaming. Now, speaking to the European Parliament in Brussels, Rutte warned that such an idea would only benefit Russian President Vladimir Putin, arguing it would stretch Europe's military resources and ultimately make them weaker. Listening to the NATO chief.
And if anyone thinks here, again, that the European Union or Europe as a whole can defend itself without the US, keep on dreaming. You can't. We can't. We need each other. And why do we need each other? I tell you. First of all, because also the US needs NATO. They are also in NATO because for the US to stay safe, and by the way, Arctic region is evidence here, they need a secure Arctic, they need a secure Euro-Atlantic, and they also need a secure Europe. So the US has every interest in NATO as much as Canada and the European NATO allies. A European pillar is a bit of an empty word. I guess what you mean is a sort of next to each nation to have a sort of European defense force. I think, but of course that's up to the European countries to decide, but I think there will be a lot of duplication. I wish you luck if you want to do it, because you have to find the men and women in uniform. It will be on top of what is happening already, and it will make things more complicated. I think Putin will love it. So.
And let's slip into a very short break, but with 5 days to go for the Union Budget 2026, can Finance Minister Nirmala Sitharaman rewrite the growth of the writing instruments industry? We'll have Luxor's Managing Director Pooja Jain joining us on the show to tell us her budget wish list for Finance Minister Nirmala Sitharaman.
रश्मि, हाँ? ये मैडम बड़े शहर से छोटे शहर बसने जा रही है, बताओ। अंकल
इंडिया के छोटे छोटे शहरों में ही तो है बड़े बड़े अखाड़े।
नए नए दावपेच सीखेगी और फ्यूचर में मेडल जीतेगी। और बेटा इनका फ्यूचर?
बड़े पापा, SBI लाइफ से इनका फ्यूचर सिक्योर है।
अभी तो इसकी जीत के इरादा पक्का है। करो पूरे अपने इरादे।
अपनों से किए सभी वादे।
SBI लाइफ अपने लिए,
अपनों के लिए।
With Skoda Supercare and growing network across 180 plus cities, you never drive alone.
Skoda.
Taxes, jobs, housing, electric vehicles, defense. News 9 decodes the numbers behind the noise. You define India's growth story. We decode what's in it for you. Budget 2026. No noise, no confusion. A budget for a bulletproof Bharat.
तेरी एक जिद और फैक्ट्री वर्कर्स सब डबल।
रिटायर हो जाऊं क्या? अच्छा, बिजनेस के लिए लोन का आइडिया किसका था? पर बुढ़ापा आ गया हो।
इनकी जिद ने कारोबार भी बढ़ाया और रोजगार भी। टाटा कैपिटल बिजनेस लोन्स के साथ।
You're watching our special coverage, Budget for Bulletproof Bharat. Can Finance Minister Nirmala Sitharaman deliver a budget that benefits not just the millions of Indian taxpayers, but also corporate India? Well, joining us on the show this morning is a very special guest. Luxor's Managing Director Pooja Jain is here to tell us all about her expectations, if not a wish list, from Finance Minister Nirmala Sitharaman when it comes to Budget 2026. Pooja Jain, thank you so much. Pleasure having you here with us on News 9. There's something very interesting that happened by way of GST 2.0, and while the prices of notebooks and pencils were reduced to the GST at 0%, writing instruments and pens continue to attract 18% GST, while the GST Council and not Budget would be the forum to make that correction, if at all. What are your specific expectations from Finance Minister when it comes to the writing instrument sector?
Well, thank you for asking me to come on this program. Clearly, Ms. Sitharaman has done a lot for the country in the last few years and is continuing to, including women focus of building entrepreneurship, etc.
Right.
And in the writing instruments, GST specifically, you're absolutely right. There seems to be an anomaly which the team or the committee has needs to relook at, where notebooks and only pencils are at 0%, and the rest, which is the main writing pens and markers and highlighters and whatever the office to school students use, is still at 18%, which makes limited sense from my point of view and the industry's point of view, as I speak on behalf of the industry, that without the writing instruments, a notebook cannot complement each other. And we're not only talking to the kindergarten students who actually stop writing after a particular age with pencils.
Right.
So this definitely somewhere is an anomaly which I would urge Madam's team to relook at. The other thing would be obviously the export tariffs. There is a huge opportunity for India's this part of the industry to work with US, especially looking at what their sentiment with China is. If we don't have that support from the government sooner rather than later, this opportunity could be quite big. China has developed a huge infrastructure for this industry, including large retailers like Walmart and Target and many others, who continue to buy 90% of their requirement in writing instruments and enabling industry like whiteboards and anything to do with school supplies.
Right.
And from pens, markers, it's a huge volume. Literally, there are cities made working on this category in China.
Right.
And I think that if we, as Indian industry, are ready, we are ready as infrastructure. We just need the support on the tariff part from the government, which we can then support and give strength to our customers, despite the fact that it's a larger issue where the US president and others have to decide what they will finally do.
Absolutely.
But in the interim, I think the government can support. This industry is not that big. I don't think it's going to, but the long-term effect of this in the next 3 years can be huge from export point of view with the US.
Absolutely. So let's break it up into two parts. One, of course, is the demand for stationery supplies and the other is the supply. I think we are talking about the supply side strengthening by way of incentives to push India's exports. But talking about the demand side of the story, Pooja, if you remember, there has been a steady increase in the allocation for the education sector. Now, what can the finance ministry further do? Because again, there are two sides to it. One, of course, is the primary education, the school education, and then there is a higher education. So there has been an allocation, education ministry allocation of 1.28 lakh crore rupees in the last budget, of which the school education budgetary allocation was 78,000 crore rupees and higher education at 50,000 crore rupees. Overall, in your opinion, if there is a higher allocation towards the education sector as a whole, is that likely to in turn increase demand for stationery supply, including the writing instruments as well?
Absolutely, because see, in the writing instrument industry for Indian population is a huge opportunity because we have a very young population. And that young population starts from the basic coloring to simple pencils and goes to the writing pens and using it as they grow. But as the education sector is being focused, the writing instrument sector from the government is probably not a priority, which I would urge the government to look at.
Right.
We have a lot of employment connected with this because there are a lot of women in all factories involved in the packing, assembly of the manufacturing of this industry.
Right.
It's one of those industries where women workers are primarily used.
Right.
I think this could be a very important step if the government looks at it a little bit more minutely to evaluate. I've already submitted the support which is needed to the finance ministry. I'm hoping that we get a response soon on the subject.
Okay.
But the education sector going forward and the writing instrument sector is actually complementary to each other.
Absolutely. And now let's talk about the supply side.
And there's also a large part of children coloring and art creativity, which is going to be huge in this country.
Absolutely. And sticking to children and sticking to, this growing cohort of more urban mobilization of Indians, there has been this long pending demand from the toy sector to be included in the PLI incentive scheme. We haven't really seen too much conversation on the larger stationery sector also getting PLI-like incentives. Do you think production-linked incentives is something that the Finance Ministry should look at for the entire ambit of stuff which is used by children and urban parents? And should a PLI-like incentive be crafted for the stationery sector as well?
And especially for the export focus.
Right.
The export focus is a big opportunity because, as I said just a minute ago, China is the largest factory for writing instruments.
Right.
Still, we have won a lot of business, but we are not even a stone in the water yet. There's a big opportunity there. As I said, there's cities made only for this industry. We need to focus on this and it will be driven. Like we have had dumping duty for import goods. We should have more focus on local manufacturing of writing instruments, which we are ready to do as companies. And technology is already there. We can give the best to the consumer, the best quality and all of that.
All right, Pooja. Well, let's pivot away from just the writing instruments industry for a moment and really talk about another large issue which is staring at India, and that happens to be making India and making Indians job ready. Do you think in that context there is also room for Budget 2026 to really double down its focus on skill development and also make India's youth AI ready, AI enabled at one end of the spectrum, and at the other end of the spectrum, should there be a greater R&D and innovation allocation to create more value addition in the Indian job market and in the Indian industry as a whole?
Yes, of course, with the youth in the country growing so fast, and now that the social media and the digital world has actually made them one, whatever's happening in the US for the youth is also happening in the minds of the Indian youth. There has to be a balance of the AI readiness in this country, but we also don't want, with a large population like ours, unemployment. We need to have a balance of that. Where we need to put AI, how we need to fix that to improve the knowledge skills of our country is something which our country has to stand up on stage for.
All right, so the country has to stand up on stage 4, but there's also this sort of critique, Pooja, and if I can ask you, as a representative of India's manufacturing ecosystem, there has been this critique of the Indian manufacturing space as well, which suggests that while the interest rate regime in India is low, the government continues to do the heavy lifting when it comes to GDP growth and what some people define as the animal spirits of corporate India to really double down on capex investments has not kept pace with the vision of the government. As a manufacturer yourself, do you agree with that critique? And what have you as Luxor done to really double down on investments to create more employment and create more manufactured output for India?
No, we as a company obviously are clearly focusing on the scale of our operations. We have been 60 years in the country, pioneered the writing industry. So definitely the focus has to be on scaling up production and thereby increasing employment, women employment as a focus, because that's what this industry drives and thrives on.
All right. So women employment has been a focus, continues to be a focus and a pioneer for the last 6 decades. Pooja Jain, MD Luxor, thank you so much for joining us here on News 9 and thank you for all those inputs that you shared to Finance Minister Nirmala Sitharaman. Well, of course, we still have just a few days to figure out how much of that will make it to the Finance Minister's speech. But with the union budget for FY 26-27 set to be presented by Finance Minister Nirmala Sitharaman on the 1st of February, all eyes are on the big policy decisions up ahead. Now, News 9 has launched a special Budget 2026 poll, and your voice, the viewer's voice, matters most. All you have to do is pop out your mobile phones, pop open the camera application and scan the QR code on the screen. Take part and vote on the key question that will shape India's economic future. Now, winners with the most correct predictions will win Amazon vouchers and have the opportunity to also be featured on News 9. So today we ask, will the tariff impact on the MSMEs get a budget relief? All you have to do is scan the QR code and vote yes or no. I'll repeat that question. Will the tariff impact, remember the US tariffs is what we're talking about, will the tariff impact on MSMEs, the micro, small and medium enterprises, get a budget relief? Scan the QR code, vote yes or no, and predict what Union Budget 2026 has to offer. And with that, it is a wrap right here on the special coverage of Budget for Bulletproof Bharat. Thank you so much for watching. News continues right here on News 9.
तेरी एक जिद और फैक्ट्री वर्कर्स सब डबल।
रिटायर हो जाऊं क्या? अच्छा, बिजनेस के लिए लोन का आइडिया किसका था? पर बुढ़ापा आ गया हो।
इनकी जिद ने कारोबार भी बढ़ाया और रोजगार भी। टाटा कैपिटल बिजनेस लोन्स के साथ।
Taxes, jobs, housing, electric vehicles, defense. News 9 decodes the numbers behind the noise. You define India's growth story. We decode what's in it for you. Budget 2026. No noise, no confusion. A budget for a bulletproof Bharat. This isn't a trail of peace. This is pressure overload. A hill built for 1,000, forced to carry lakhs.
Instead of lightening the footprint, you have allowed people to actually get into every nook and corner of the Himalayas.
Careless travel, choking hills. If we don't change now, there won't be much left to enjoy.
We need to follow the Bhutan model, regulate people who can access hills.
News 9 presents Heal the Hills, continuous coverage.
When Trump captures Maduro, News 9 breaks it first.
It's happening far away, but it has tremendous consequence for the world.
What happens next?
Biggest international headline of the hour.
The US has conducted military strikes.
This is the Venezuelan president.
Maduro faces multiple charges, including narco-terrorism.
This is Maduro being taken to the New York court.
Donald Trump indicated that Greenland might be next.
Where will Donald Trump stop?
A dramatic U.S. operation, power shifts in Venezuela.